Let's talk a little bit about lending. One of the most popular lending products right now is a business credit card, and maybe the fact that you can get several of them. I think the term being used right now is credit card stacking. Another way to look at it is a syndicated line of credit, like several different lines of credit on the way to a particular funding goal or a capital goal that you might have. Either way, it's one product. Business credit cards are one product. In terms of lending, it's a revolving account. Now, there's lines of credit as well, there's charge accounts like the Amex products that are out there, but it's one type of account, a revolving account. There's also installment loans. These are term loans. Now you've got merchant cash advances. Now, if you're a high revenue business, those don't affect you much. In this case, you don't mind paying a weekly promissory note to about 6 months because you're making the revenue. Now that might sting a lot of people, but there's businesses out here doing $20, $30, $40,000 a week. They're distributors, car dealerships, collision repair shops, construction, and all of a sudden they need a large piece of equipment or they need a large invoice taken care of. Merchant cash advances don't scare those types of businesses, but for smaller businesses, it might be something that you want to run from because the factor rates are from 1.3 to 1.4 in some cases. 1.3 being 30% interest, 1.4 being 40% interest. There's also longer term loans. Now, SBA will stretch you out to 5, 10 years on a loan, but there's a lot you have to meet. There's a lot of requirements you've got to meet. You got to meet revenue goals. You got to get 2 years in business. You got to understand what you're doing. They're going to have a conversation with you. And SBA doesn't loan anything. Banks do. They just underwrite. So they want to make sure the deal is solid before they come to you. Again, this is another type of installment loan. It's really interesting to me when companies only do business credit cards or they only do merchant cash advances. There's so many different types of approaches to securing lending. And the stronger capital companies also know that, and they're working on all of those. What's the best fit for this revenue, for that personal guarantor, for this industry, for the amount of invoices that they have outstanding, for the amount of purchase orders that they have out there, the amount of customers that they have, for the diversity of deposits that they have, even the industry type. You might have heard you can string together 10 $10,000 business credit cards to get to $100,000 to what? Buy a piece of property. Well, that is one way to do it. Another way to do it is to go through our readiness training and maybe you just qualify for a $120,000 loan for a piece of land. Bottom line is lending is much more broad than business credit cards. It's one of the most popular products. It's certainly how we cut our teeth. But the moment we started having customers that were not interested in several business cards and they wanted lump sums, lines of credit, installment loans, we've got products available for them too with several different lenders.